Hello, welcome to the live financial modeling smart helping stream. We got a big one today. Let me send out the links here to Twitter. It's going to be enterprise SaaS. Really one of the top models I've ever built on smarthelping.com. Let's send that out. So this is part of the SaaS bundle. It's the number one template here. And we're going to get this thing a three-statement model and a cap table. And there's going to be some difficulties. If you remember last week, I integrated a new cart option for the entire site, so that was huge. And I also was able to upgrade. What did we do last time? We did the janitorial cleaning service. So now we're doing the enterprise SaaS model, and then lending business already has one. So after that, I'll have to look and see what's next for next week. But this week's going to be enterprise SaaS. This template is 175, one-time fee to get, and it has customer configurations for different contract lengths, retention rate, total contract value, percentage changing contract value, it, uh, and then acquisitions through ad spend, organic growth. We'll get into um, all that. Uh, don't forget to like the video, subscribe, and if you want to check out more, you can see all financial models here at the tab at the top. And you can get everything on the whole site for $9.99, or you can buy templates by bundle if you just want certain types. Or if you want individuals that don't fit into any bundle, you can always email me and we can work out a deal. But the best value, everything on the site for $9.99. Half these templates people have paid, $900,000, $2,000 to build. So to get them all for this price is huge value. I've got stuff for accounting, human resources, lending, industry specific, inventory management, a lot of cool stuff here, real estate models, mobile home park, value add general, self storage, mixed use, multifamily, preferred equity and preferred return waterfalls, all sorts of stuff, joint venture, and obviously SaaS we're doing today. Alrighty, well, let's get into it. So this will be a pretty, um, the only difficult thing is going to be this little selector right here, customer receipts collected up front. If you mark this as yes, the model will, if we go to the monthly detail, you can see the cash flow will be higher because it's saying the total value of the contract is collected up front. So that's going to require some logic on the balance sheet that we have to integrate because it's going to be, we're going to have to do like deferred revenue or unearned revenue, earned revenue, um, and there's going to be some accounting things we got to do there to make that look right. Other than that, if this was selected as no, then it's a pretty standard integration. But the fact that we have this selector, and this is important because it's a cash flow thing. So business is going to have that logic. What I'm going to do is I don't want to overwrite this. So I'm going to move it down. And then the rest of it is fine to update. I think that's enough space. So I'm going to update from another SaaS template, the mobile app one. Man, it feels good. I haven't streamed since last Tuesday, and this week I'm looking to do a couple things. I want to get this enterprise SaaS integration finished. I also want to do some standalone template, or at least one standalone template. So will be a lot going on this week. Where okay, so this goes down to 43. Okay, that's fine. I'm just getting this ready for importing all the new logic. And what I have to do is then update each of the tabs to match the names. Also update some of the names of these tabs to match. I'm not going to be taking away any of the existing logic for revenues and expenses and all that. All I'm going to be doing is adding financial statement summaries. Okay, so we're going to have, should be debt schedule. So we got to add the financial statements. There's 6, monthly and annual. We'll have terminal value, capex. What else do we got here? Cap table and startup costs. Yep. So all this we will not need one time in capex. This will be more dynamic and entered on a different area. Oh, unmerge all of this. Okay. So we got income statement monthly, income statement annual, balance sheet monthly, balance sheet annual, cash flow statement monthly, cash flow statement annual. Then we'll have cap table, cap X, and there's a reason there's space here and all these. It's for the import to go smoother. Because I'm going to use the find and replace. And when I have formulas referencing another workbook, they come with the apostrophes on the left and right. And if I remove the text from the reference to the other workbook, it'll then give an error if I have no space in the tab names. So that's why we got to have spaces in everything that's going to be referenced. And it's a lot easier than building it all from scratch. So that's why it's nice to always work from a template that's got what you need on it for stuff like 3-statement modeling where the logic is difficult to do. CapEx, cap table, startup costs. Okay, I think that's everything. So what we'll do here is start importing. We'll start right here. I only want to go to 43. And then let's look. I'm just looking at all the, okay, so yeah, these are standard assumptions, so that's fine to update. And then we still have this. We want this to be right here. All of that, we'll have we'll update all the formatting. We'll get all the tabs in, all the logic we need. And then we'll try to fix what, if anything, broke. And that's the goal for today. I've been doing these upgrades on all my financial models for about, well, since January. And I've gotten through a good amount. I think it'll probably take me another 3 or 4 months, but I can't wait to finish because then I can start doing new models and streaming all that, and it'll be great content. But until then, this has got to be done for all the startup models because there's very important logic that needs to be added. All right, let's import these. So startup costs, capex. This is pretty standard for anything that's depreciable. Cap table. This will be 5 years, so that's fine. We've got startup costs. We already did that. We need terminal value. Okay, did we get everything? Cap table, test schedule. All right, I think so. So now here's the nice thing that we can do. We can go find replace, and I need to remove all of these references to the other workbook. So I'll find anything that says that, replace it with blank, and you can see why those little apostrophes will be left. If what's left is a reference to a tab name that has no space, it will throw an error and it will not work. So we figured that out pretty early on in this integration process. It made life a lot easier doing it this way. Uh, wait, only 356 replacements. Oh, shoot. Okay, that's fine. Actually, let's undo this. We need to import all the financial statements. I almost forgot the most important thing that we're doing here. Let's copy this over. So income statement, monthly and annual. And putting all this time in here will save a lot of people time in the future when they go to work with this. And one of the main focuses of all of my modeling is to make it usable and editable and adjustable. And to do that, you need to be able to follow what's going on pretty easily. And through all the formulas and the tabs and everything. So that's where my focus is. No hidden tabs, um, no really complicated formulas. It's mainly just I try to use the most simple formulas possible, but use very nice architecture in the tabs so you can follow how everything is being calculated. And yes, I mean on these matrix tabs, they are long. Like you'll see to do all the dynamic logic that we need to do, we have matrix tabs that take, probably thousands of rows. But if you look at them, they're not that hard to follow. See here. So all this logic, you can figure out why it's being used, and it's the only way to make it dynamic with these different contract assumptions and everything. And there's no numbers in here because I have to update the references now that we changed some of the base timing and positioning of the global assumption tab. Okay, so we got all that imported. Now let's try to do our find and replace. Nice, 12,000. Okay, so that means we imported properly. I only need one other thing from this, which is that, so this is going to be the formula that pays off any principal balance if the selection is yes here to include terminal value. So we want to put that right here. Looks good. Drag it down. For here, we want to say if global control tab here equals yes, then take the end month, otherwise NA. That little piece of logic solved so many problems for me too, with the balance sheet, getting the balance at different timing assumptions. This really made a lot of the referencing more just easier and elegant. Okay, let's make sure this is referencing the right thing. Okay, so that looks good. And month 60, and it's paid off, and it can be any month. This should be only pulling here. Alrighty, so we don't need our import sheet anymore. Let's go ahead and format and unbreak anything that's broken. So, well, first of all, what I want to do is, this is before I started using the light boxes, so let's give this a lot of light box stuff here. Looks a lot nicer. It does have the formatting with the light yellow blue text, so that's good. It's not too old of a template. I think I did this about a year and a half ago, roughly. And this has come in handy, and oh shoot, I messed up. Shoot. This template has been used by a lot of different companies, and it's the best one I've done. Just and it could be these contracts can be month to month. You can use it for that as well. It doesn't have to be giant enterprise contracts, but it can be is the point. With any term, any retention rate, and that will all flow over to um, the user counts and revenue and all that. All right, let's get these with a light line. Perfect. So you can do up to 3 customer tiers and drive their assumptions here. These can be B2B, B2C, or one can be B2B, one can be B2C, etc. Um, and you can see how you define the contract values, the term, different growths in users and how that happens. You can also increase the contract value at renewal by some percentage, and that will apply dynamically based on the starting contract value in the year a given customer cohort joins. So this was and it's simple enough that it can be basically be applied to anything. And then if you need to do other stuff on top of this, it's not that hard. Uh, okay, so that's good. We want to format all of this. Here we've got some dynamic scaling for customer service reps based on your user growth. Same with sales based on user acquisition. Where you have dynamic headcounts. And you can have up to 2 types for each tier. Okay, we're going to use all of this. This is for the fixed expenses, cost of goods sold. Looks good. Debt schedule. That's fine. And then these are formatted. We just have to remove grid lines and widen out the columns. Cap table. Figure out how much money you're going to need to raise. This model will solve for the minimum equity needed, and then you figure out, model different investment amounts, different percentages they get for outside investors as well as insiders. Startup costs. Okay, terminal value. And then here's the big one. So let's do, usually I go freeze that. We'll go 15 column width on all these. Oh. And the main reason you want financial statements is because they speak the same language. So someone who is versed in accounting can go in and look at these and say, okay, I understand what your numbers mean. And it's formatted in a specific way where you've got specific titles of things and ways that the logic interconnects that someone can follow along. And mainly it's just to reduce confusion, honestly, in what revenues are, what expenses are, what cash flow is, what's the profitability look like? What's being spent on what and when? Whoa, shoot, I did not want to do that. Okay. So let's now fix some of the date issues. All right, start month. Well, first we got to go to validation. We're going to use that still, but we need to change. This is my secret, or not secret, but my logic I built on how to do these contracts dynamically over time. Very, very good, valuable stuff here. Okay, and start month. And let's go update. So this drop down, we have to put in. We don't need the NA anymore because we have options. Yes, no option here. That helps with that. All right, that's good. These are still working fine. That's fine. CapEx. So here we got to update these with the validation list for the dropdown. And this is so you can just do all your timing. Okay, perfect. We'll stagger these just to make sure the logic's going through. Okay, cap table, that's fine. Doesn't have any drop downs. That's fine. That's fine. Here, okay, we got our dates back. Looking good. Perfect. Now we got to do, so this is still good. We got to do some things here on the monthly. First of all, so see how it says if F4 is greater than global control C5 then 0, that's trying to end the model if the end month is greater than, if this is greater than the end month. But we changed, it used to be C5, now the end month is in C6, I believe. Yeah, so that's an update we got to do on this monthly tab. On the whole tab, we want to go find replace, and we want to replace anything that says global control C5. With C6, and we only want to do it on this sheet. Okay, so there we got numbers coming back in, that's good. Let's make sure it's working. So if I go November, good, it stops everything in November. Let's also make sure, is it working here? Okay, so this is C5 with a lock. Okay, so we got to go find replace and lock the 5 and lock the 6 on these. Okay, so now those are coming through. Good. Everything's stopping in November. We will have updates on this, so we actually don't need this here anymore. We don't. Startup costs, yeah, we will have. CapEx is just going to be a row on this section. Everything else is fine. And the annual detail is just summing up the monthly, so this is fine. We just got to remove the CapEx section and exit. Also, we will not need this. And therefore, well, this is just going to be this. Oh, hold on. What are we missing? Okay. And monthly, let's do the same thing. Just want to make sure. Okay, good. So that's the same. And we won't need this. Alrighty. So some basic adjustments there. We'll add back all of that other CapEx and taxes and everything once we do the cash flow statement. Um, so yeah, not too much to break here, which is good because this is a more recent model, so there's not the formatting's pretty solid already. Where is the distributions tab? Oh, it's over here. Let's put this over here instead, and the visuals as well. Okay, so I don't know if I feel like tackling the big issue yet, or this morning with the whole cash flow up front. Um, 1 second. All right. Well, I mean, we've got all the tabs integrated, fine. Let's look at, I mean, we could think about how we want to do this. So this is the main logic. Your your initial receipt would be, like in this case, you'd collect $1,050,000 from the first contract, which is just doing, the number of users and all the different tiers. There's only one tier. Tier one's only one active, and the average contract value is 350,000. Now 175. Let's go over here. So 875 or 1,050,000. I think that's that number times three because there's three right added. Oh, no, there's one. So if we go over to that monthly cohort, let's look at it. So here's that initial monthly cohort right here. And this is their 1, 2, 3, 4, 5, 6. So it's 6 month contract. 1,050,000 is the total value. And how many are in that first one? There's three. So 350 times 3, it's our number here. And then you reduce the amount that's actually being earned in the month, and you get the net change in cash. Now what I have to do is figure out how I can track all of this over time to show at any one point on the balance sheet, what is the amount of unearned revenue or earned revenue versus remaining revenue to recognize. So we're going to have to do some stuff here. I'll probably have to look up some things as well. And beyond that, the rest of this is going to go smooth. So let's try to just mentally think about how this should work, and then I might get into the I might start getting into the income statement integration, just because I know we're going to need some time to get through all this. Okay, so again, why are we at 3? Starting organic account. Okay, here we're adding customers through ad spend as well. So if we go over to our monthly detail, in tier 1, we have 1 from organic growth, we have 2 from ad spend, total of 3. And that is getting us, if we collect all the money up front, $1,050,000, reduce the amount collected for the month, and then there's your net change in cash flow, which will affect this. All right, so that seems fine. Let's go to the income statement here. So we've got just one revenue type, which is just subscription revenues right here. So on our monthly detail, let's just this or this subscription revenue, and it would be our total here. Also, we can move this back out to December. Okay, cost of goods sold. Let's look at that. So we have, is this just the only cost of goods sold? Let me see. G&A, R&D. Yep, okay, so that's fine. So we got cost per active customer per month in tier 1 through 3 and customer service cost 1 through 3. And this would be, yeah, we'll just leave it at that. Okay, and then we've got general and administrative, sales and marketing, research and development, and then startup costs, and it's got it there, yeah, 850. Alrighty, looks good. Let's drag these over. That's fine. Interest is fine. Depreciation is working off that CapEx schedule, and it looks good. Then we've got some tax stuff. Okay, so income statement seems fine. Go to annual. All we gotta do is clear these. The rest of this is good, and this matches 59. Okay. So straightforward on that. Here's where we're going to get into some stuff. So cash flow statement. We're going to have to add some stuff here in the operating activities. So first, let's just put what's here, and then we'll do what we got to change. So 10, income statement, 10 is fine, that's revenue. Other expenses, 1525. Perfect. And here and here, that's fine. So what we have to add is let's see. Reduce receipts, add upfront collection. And here we only want to reduce if this equals yes, then we want to take the negative value of customer receipts. Otherwise 0. And then, oh, I'm going to lock that. And then here we want to say if this equals yes, then we want the total collected up front. And then what we'll do is sum this up. So the net effect is 875, which you can see here. 701, 1194. You see 701, 1194. Okay, good. And that's it. So those two lines, that makes sense for the cash flow. Then you could just sum all that up. So you reduce that, add that. Okay, that looks good. So if we hit no here on this one, we go over to the balance or cash flow, and these are now no effect. So it's just the amount here. So that's one aspect of this. Let's go back to yes. We also now have to figure out how this is going to affect the balance sheet. And if we want to, so we could just show the cash flow here, and we could just say this is our cash change. The question is, on the balance sheet, do we want to account for unearned revenue and show that depleting over time and cash being recognized? Or we can just show it here. We know it's a net zero effect. And just show it here. Let's look up some things. So, let me just type in unearned revenue balance sheet. Unearned revenue is money received by an individual or company for a service or product that is not yet provided, right? So if you click money up front, provide service over time, you have unearned revenue. It's recorded on a company's balance sheet as a liability because it earns that owed to the customer. Okay. I think we are going to try and implement this on the balance sheet. It's in the current liability. Yep. Okay. Unearned revenue accounting entry. Just want to see the unearned liability for the received payment. So the initial entry is a debit to the cash account, right? Because you're getting cash, so that's recognized. That's going to increase the cash account. Credit unearned revenue, which is now a liability. So you're raising assets and raising liabilities, so it still balances. That's good. Unearned revenue is liability for recipient of payment, so the initial entry is debit on cash, credit unearned revenue. As the company earns the revenue, it reduces the balance in unearned revenue. So unearned revenue goes down. Debit, which just means you're reducing it. It increases the balance in the revenue account. Okay, so this would require us to not recognize the revenue. Let's see. Which means on the income statement, this revenue, we can't put revenue here we can only put it as it's earned, which actually it's already doing that, so that should be fine. Okay, so this is good enough. Let's think about now, because there's one aspect is knowing the accounting entries, and then the other thing is figuring out how do you implement that logic in Excel, which are two different things. It's not the easiest thing. All right, so first, let's just finish up all the other items real quick. So CapEx is fine. Let's just terminal value. On this business, the terminal value, in my opinion, would be best calculated as a multiple of trailing 12 months of revenue. So that's fine. 12 months revenue, we could do a multiple of that. Let's just say some multiple. And so that's fine. So let's see, 111 million, last 12 months. That's correct. 4 times multiple here. And you've got some amounts applied to extraordinary income versus fixed assets. Okay. Okay. Um, so that's fine. Let's just not include this for now. Let's just put no here. And then we have sale company stock. Okay, so I'm actually gonna have to do this too. Let's put this back as yes. We need to do all of this before we do the other part. So let's put other, let's see, 232 to 248, 3248, 3248, 3248. And so startup costs. What's that go down to? 20. Okay, perfect. So that's fine. We want CapEx in here, taxes, exit proceeds. And then that should be allow us to figure out the min cash requirement. All right. Oh, don't freeze. Oh no, it froze. Oh, please don't crash. That would not be good. We do not need a crash here. Oh no, 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 no. I don't know when the last time I saved was. What I need to do is add these CapEx, taxes and exit proceeds effects, update the cash flow, and then we can figure out the minimum cash needed for the equity requirement. And then once everything balances, then I could go in and add this other logic. I can't do anything right now though because we are crashed. Please help us. Give us some good luck here. We need some prayers. Oh, okay, there we go. It worked, it worked, it worked, it worked. Okay. Whatever. Can I get out of this formula? Please, I just want to save. Come on, Excel. Okay, this is moving. We are all over the place. Can I escape out of this? Man, we're just about to get into the fun logic too. Oh, please. Okay, whatever. Can I just delete? Come on. I have no idea what's going on this. Don't do this, Excel. Oh no. Our viewer left us. This is so annoying. How much time did I just lose on this? Like, I do not want to reset. This is a bad one. Oh. Come on. Oh, you figure that on the most important model upgrade, I get a freaking crash. And who knows when last time I saved was. I literally have no idea. I mean, it's just frozen. See, I hit OK there, but then nothing happens. Oh man, this is not good. I've never seen this happen ever. Autosave is off. Oh, for goodness sakes, please work. For some reason, when I tab in and out, it tries to do something. What in the world is going on up here? Wow. I haven't seen my computer do this since I had one in like 2002. That is not a good sign. Minimize, maximize. It somehow it's just crashed. Like, really, this is happening right now. Come on. Alright, screw it. We are gonna have to restart. This is just horrible. Wish I could save. Alright, where are we at? Enterprise V2. Let's try to. You can't even exit out of this thing. And trust me, I have a good computer. This is a very good and new computer. Alright, let's go to the task manager here. Microsoft Excel and task. Well, that ended it. Let's try to re-pull it up. See where we are. Okay. 1049. Sure, let's try. It can't. Oh wait, we have this. I just did that. So we did save recently. Okay. That's good. So our issue was we just tried to reference the cash flow statement and had an error. Oh, what is this? What the heck? Honestly, last stream there was a couple instabilities in Excel from going to tab to tab. I don't know what's going on with it. All right, let's just try to do this again. Cash flow, CapEx. Nope, that's not good. It's froze again. Some reason it's having issues referencing a different tab. Okay, but it worked. Okay, it worked. Let's just look at what the taxes are on. Taxes are on 14. Let's do 14, and then exit proceeds are 20 and 21. I mean, if I can't tab though, this is going to be a problem. I mean, that's a big problem. All right, I thought we put proceeds back on. Why do we have a reference error? Oh, I see, I see. Maybe that was causing the issue. We don't need this. We really just need this. Now, what? What is going on here? Holy moly, don't tell me what. Why? What in the world? Customer via ad spend. So what I'm worried about is, did something change that I didn't know? Like, did I break something while while it was broken and it got saved somehow? I reopened it and it still broke. Okay, if that is less than revenue assumption is 16. First of all, it's a min of this. See, look at this. This is like the tabs are like bleeding together. All right, so why is this an error? If E4 is greater than a global assumption is 0, otherwise if E4 is less than revenue assumption is E7, 0, otherwise index 16. All right, let's see what's broken. So let's take it apart. Start with this one. Okay, so this is the error. Revenue assumptions row 16 is not working. At customers acquired through ad spend. So index 16 if E2, oh, here we go. So this is referencing E262. That's obviously wrong. Wow. So I must have hit that somehow when I was messing with when it was before. Okay. So are we good now? Yep, there's exit value, min cash. Let's make sure some okay, good, that's fine. So we have this working equity requirement. Are we balanced here? No, we're not at all. What are we missing? Startup costs. Oh, I know. Okay, so we go EBITDA minus debt service. Oh my goodness, look at this. What is this? Debt proceeds. I think it's debt repayment, which we don't need anymore because it's going to be the amortization schedule right there. This we don't really need, but it's fine. And we do. Okay, so EBITDA minus debt service plus debt proceeds minus this plus this plus this plus this minus, or no, plus anything happening here. And this is where things are going to get tricky with this balance sheet. Okay. So we're still out 875. Yep, so see here's where, so I think we actually are in the natural spot to do the calculations we need to do. Because you can see we're out. This is probably the cumulative amount of what's happening here. Let me do this plus that. Yeah, so see, this is the accumulation of that difference, which makes sense. That makes complete sense. Now this cash position is 0 up front. Oh, because this is the lowest we get. Okay, so that makes sense. Oh no. Oh, don't do this. Alright, I'm not touching anything. We're just gonna wait. Oh, we're just gonna wait. And all I did was press. What did I even do? Why are we over here in cash flow? So it's got me in the formula bar, but it's not in the formula bar over here. And it looks like I was on the monthly detail. We still have some things we gotta clean up on the other file. Or on the other on the other rows. we're stuck in a formula bar, but we're also like it thinks we're over in the cells down here. Never seen this. Has anyone ever seen this before? Like it's stuck, the cursor is stuck up here in the formula bar, and I hit enter, and it's like it's frozen. So see, it's here. When I hit enter, if I click up here, and 1, 2, now it's 2 more down. 1, 2, 2 more down. I can't move tabs. I can't do anything. This is a completely horrible. And I figured this would happen on the day. I'm trying to get like a lot of this model done on the stream here today. I got to deal with this. Like, I mean, I don't even know. Oh, now we're on the distributions tab somehow. And as I'm doing this, I'm pretty sure I'm breaking all these cells. I mean, I'm going to have to exit this out. Don't save. Let's try to reopen it. I don't know what I lost or didn't lose. Okay. So see, this was an error. This is an error. Let's try to figure out if we broke anything else on here. So what we were discussing was 875,000. So our balance sheet, we're out by the cumulative effect of this because we're collecting cash up front on this, which is toggle, like we can toggle that to do it or not. So this accumulation here is what we're out. We have to put in a current liability called, and it's going to go here. I'm just afraid to break stuff right now. Unearned revenue. So this unearned revenue account should equal this. Actually, so the total cash received and then less any cash recognized or any revenue recognized. And that's a liability. And then the next balance would be this, and then again plus any cash received less anything here. And so our liabilities are going up as we do this, which makes sense. And now that balances, the question is, now what else do we need to do here? Also, let me make sure we didn't break anything else on this. Okay, these look fine. So we have unearned revenue as the accumulated amount. Now I'm missing, so difference. I'm trying to think though, does it need to go down as this revenue gets recognized? The annual also needs this in here, so current liability. Unearned revenue, and I don't know. I think we want an index formula here. So let's do the same thing for accumulated depreciation, except we want 42. Okay, we're all out of whack here. We are all out of whack. Because the annual cash flow we didn't update with the, so had that effect. Okay. Index 34, so we want to pull we want to pull 42. 42. Also change this to 42. Okay. And this is off. I knew this was, as soon as I started the template today, I knew this was going to be the main thing because I've never done unearned revenue on a balance sheet like this. So it's gonna take some time. Okay. So let's just walk through the logic. What is in this cash number right here is everything. Here, we're just increasing a liability. This cash position is already doing that by this 875 here. And then accumulation of that, reducing amount received, increasing upfront. So over time, that builds 24.9 million. So it's essentially saying right now, at the end of this, we have 24 million in cash receipts that we actually have not earned. So that makes sense. Let's see, this is 478,778. This isn't even, let's update. All right, this is not needed. So 252. And then this is not needed. Startup costs, put that in. And we want to make sure this matches our monthly ending balance. Off by 324 million. That's quite a bit. And it's because this doesn't make sense. This should be a sum ifs. There we go. All right. So We're at 477, 471, 421. Here we're at 478, which should be the difference of the equity contribution only, which is 1357. So technically, what are we actually out? Oh, and let's end this in, oh, it is December. That's good. So this minus this, and then this minus in equity. Okay, so that's good. So the cash balance here is right. All that we want to capture on the balance sheet is the effect of we have this liability, this unearned revenue liability that's growing. Now, it wouldn't grow if we didn't. The reason why it's growing is because we're continually growing the amount of contracts that are happening, which is fine. So this is balanced, which is good. So this is going up. The effect here is also going up, so it's balanced. What's happening on the annual though? Like, why is this even negative? Index 42. 42 is a positive number. Am I on the wrong? Wait. Index balance sheet 42. If this is 5, index balance sheet. Oh, wait, 34. How does this keep getting changed to 34? Okay. So there's that. Now, how am I out? Cash flow annual has this new logic in here. This should match the monthly, so 478, 778. Yep, that matches. We're out by exactly the amount of this somehow. So if we clear this out, it's still not balanced. Wait, what? Oh, please help me. 8. This is accumulated depreciation. What in the world? So it's pulling. All right. If we're just going to do it over index unearned revenue match the end of the date, date here, comma 11 with balance sheet 5. An exact match, please. Okay, it's pulling the accumulated depreciation. What the heck? How that can't be the same as this. There's no way. No, it's 255. Okay, okay, I see now. I see what's going on. This was fine, I believe. This is now wrong. Oh, I changed row 34 instead of. Oh no. All right, this is 34. This row 34. You love it when you find the error. It's like a puzzle. Okay, there we go. So we're balanced here, we're balanced here. This makes sense. So it's saying at the end of the final year, you've got roughly 25 million in outstanding work that you're going to have to do. And your cash balance is also higher because of that. Now, if we say no here, we're probably out. Yeah, okay, so now if we say no, then this is just 0. If this equals no, then 0. I'm actually, okay, this is great. We're about done after we get this fully working. And all we had to do is add unearned revenue uh, liability. That's it. All right, let's put this back to yes. Now let's actually end this a month early, see what happens. I'm sure we're going to be out. Yeah. Oh, wait. Whoa, 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 whoa. Now what? How do we get out? Let's go back to the end. Did I mess something up on the formula? Let's go back. So C34, we can't pull this. This has to be this plus the previous month. Okay. Save. Now let's end it here. So we need to end this. All we do is say if this month is greater than global control end month, then 0. And that's just saying when we sell the business, if we do plan to. This is 0. Oh, I did it again. Otherwise, this plus this is 0 after that. Now we still have this balance here, which makes sense. No, don't freeze. Oh my goodness, please. All I did, I clicked the annual tab. And I think I'm about done for the day after this. I just want to make sure. So let's talk through what happens if we don't include terminal value, then that's fine to show there. If we do include the terminal value, we're saying we've collected that cash, but we're going to stop operations. So technically, the buyer of the business would get this as a liability of work they have to do, or yeah. So I think it can actually stay on there. We're gonna have to update this though. So for the end month, we actually have to pull the actual month, and I think that's the only change. Come on. All right, it's being not good. Let's try to close it out and reopen it. I've been doing this for I don't know how many years. This has never been an issue. All right, so this we got that in there. Balance sheet. What we want to say here is if. Well, actually, hold on. How do we do this above? I got it. If year of this equals end year, then index the actual month on the balance sheet for this. Okay, so that'll give us the partial if we need it. Hold on, lock this and lock this. Index 42. Okay, 24,475. What are we at? So this is 457. Twenty-one 268. Uh, 478, 457. Oh, here, what is this? This is the amount, 21 268. Probably this. Yep. Okay. So we have to also put a stop to this if here is greater than this 0. Okay. Now we're good. All right, so that works. Let's make sure if we do the previous year, thank goodness, it looks like we're balanced there. Balanced. Let's say what if we don't include terminal value? We're good. Let's put a no here. Looks good. Now, based on that being no, let's change this. Looks good. Let's make it the end year. Looks good. Okay. So include terminal value, yes, no, works in all situations. Customer receipts collected up front, works good if it's a yes or a no. And we're balanced out everything. Perfect. Now, what's likely to happen is if you sold, your cash position would include all the cash that you have to provide work for. You probably would either give that to the company that you're selling to. Otherwise, they're taking on that liability that they have to provide that work contractually, and you've got the revenue for it. So that's why this is an important number. So you'd probably have to just give that amount over this, whatever this balance is. Okay. Wow. This is awesome. So we did really good today. Income statement, balance sheet, cash flow statement, all completed, and the integration done. And we did a new line item unearned revenue as a current liability, which is awesome, and it all flows nicely. The executive summary I'll update tomorrow. Distributions tab will update tomorrow. Visuals will go through and make sure nothing's broken, but it looks okay. Um, just checking here. Ah, because we had lost a couple. Let's just drag this all the way over just to make sure nothing looks weird. Visuals are actually a nice way to figure out if anything looks off. Okay, this all looks pretty smooth. Because I was clicking around when the file went dead, and somehow some of my clicking around affected some of these areas down here, but it looks like I've fixed them all. So that's good. But we'll know tomorrow when we do all of the sanity checks over on the global control. So all these we'll have to make sure work. We're just going to test distributions, executive summary against the balance sheet, and also against the annual and monthly detail stuff. But overall, pretty good. I feel really, really good about where this sheet is now. And we'll clean it all up tomorrow on stream and be done with it. And then I'm also, guys, looking at doing a new template this week for some kind of use case. I don't know what exactly yet, but I will be doing something. So stay tuned for that. Also, check out smarthelping.com. Again, if you want to check out all models, we've got all kinds of different ones for industries, human resources, accounting tools, inventory, real estate, joint venture, SaaS. You can buy all the templates on the site for $9.99. Very, very good deal. I've got over 120 templates, coming up on 130, and they all have unique logic. Very useful here if you're doing any work in financial models in Excel, Google Sheets. This is valuable. You can also buy by category.